Okay, what's up? Been a minute. It is the crossover. I have not done one of these in a while. Hell, StreamYard has changed a lot of stuff, but apparently, yeah, they have changed a lot of stuff. Um, oh wow, yeah. So now, since I don't have the paid version because I'm not doing this as often, um, yeah, I do things like I used to, but I can still do something. So just go ahead and smash that like button now or later, doesn't matter. But I am going to swing into some thoughts. So for now, bear with me. It's it's been a ride, I will say that. This is life. I mean, that's just life in general. But it's been a ride. I will say that. It's been a long ride. And if I can just be fair, crypto isn't for everyone. It's not. Um, I don't think that there's been some justice for it. When I say that, let me see here as I fiddle around with these numbers and things. But there we go. Crypto is a tool. It's like money. No, it's not a fucking currency off the platform. It can be used as such. It can be used to transfer value. It can be used to do that thing because it itself is a digital product. People say it's a commodity. Yeah, go for that. That's yeah, you can say that for Bitcoin. And some of the other ones that can't be readily minted and created like that. In some cases, it's a tool, kind of like how you can use gold. We do use gold. We in building certain things. Gold is very malleable. It's very useful. We use it in electronics and stuff like that. Yes, you can use it. That's where the Ethereum and Polkadot and Cosmos, Atom, and ADA. That's where those come into play. So yes, it can be used. You can use those networks. I will say this: I have never seen a crypto network that functions or operates like Cardano. Um, I say that because, well, it's like a combination of a couple of them. I forgot what that one crypto was. I can't think of what it's called, but there is a crypto. I want to say on CoinMarketCap. Let me see if I can open that up. I want to say it's on CoinMarketCap, and that fucker, it's a privacy coin. Let me see. I've used it before. I want to say Hurricane. I feel like it's Hurricane or something like a hurricane. That's what I feel like it is. But it is what we call an altcoin. Pretty much an altcoin is pretty much any crypto that isn't Bitcoin. Ethereum is like number two honcho. It is an altcoin. It's like the king of the altcoins. But for me, let me see. Monero. There we go. But for me, I'm not gonna lie. I've always had a preference for two others. Well, actually three. Um, as I pull them up, I will pull them up for you. Just to see if I can share my little screen here. So for me, it has been Cardano. I am very heavy on Cardano. Uh, what's another one? Algorand, unfortunately, well, they changed this way it functions too. Algorand is a no-go. I cannot vouch for Algorand. It is not. It has been dropping. I haven't heard too much from what its development is, but when it comes to function, Phantom, which now mind you, Phantom and Algorand, as well as Cardano, those are some folks that branched off from Ethereum. So these aren't just crap coins. These aren't just shit coins. These are projects like Phantom now. I just not read Sonic, so I had to get used to this thing. There's actually a platform that's on it, but I have to kind of relearn it just because of what they've done here. But 31 cents. I'll actually Phantom, aka now currently Sonic. This is one of the ones where I actually made quite a bit of money. But I bought this thing. It was like 20 something cents. This thing, I can't see the full. This is Sonic. This is what it currently is. So it was 80 something cents. That's actually right around where I sold mine, around the 80 cents mark. But so I'll show you some of what I've been doing. So when I first got into crypto back in 2019, 2020, I did not do what most of you folks did out there. Let me say this one thing. I have never, ever in my life, I have never, ever bought NFT. Never, ever. I did not go through that whole hype. I did not go through that whole craze. I stayed the fuck away from all that dumb shit. I didn't participate in that whatsoever. So that kind of lets you know what type of investor I am. Yes, crypto is an investment. Crypto, if you haven't heard, is a financial product. It is in the birthing stages, or at least it was. Now it's actually starting to become established, regulated, which if you didn't get it before, you're not going to see the large gains that we've seen since. So that's the unfortunate thing. On one hand, it was great, it was amazing. Can I not see the Phantom charts here? I might not be able to see the damn charts for Phantom. But on one hand, it was great, it was marvelous. You could get thousands of percents, hundreds of percents. I myself, I guess you could say I did get a 10x off of that damn Dogecoin. And I say damn Dogecoin because, see, this is when I was, I want to say a couple years into investment. And you wanna let me take you down a road here. Let me take you down a road on why I'm making this broadcast, why I've maintained my positioning in crypto, and why I'm not pushing it and promoting it like that. Because yes, crypto is a very risky asset. It really is. And that's the emphasis. That's a star. You can put an asterisk on asset. But let me tell you a story. Okay, so once upon a time, crypto was a baby. It was, I want to say 2000 and I want to say 2018, 2019. Bitcoin was doing what it does. Damn, Bitcoin up, I think it was like 30,000, some shit like that, or 16,000 or some shit like that. Eventually it did top out around 60,000 at that cycle time. But Bitcoin was doing what it's due. This is actually right before Bitcoin. So this is before Bitcoin got up to that 60,000, all that shit. I saw on Robinhood, because I was using Robinhood because I had a small investment account. I was putting a couple thousand in there. And I had some money on Dogecoin. And I shit you not, that shit was just sitting there for probably a year. Because, I did a little digging. This is when I was looking at the Forex market. I was looking at finances. And I was like, okay, I can see the potentials, for the returns on crypto. I've seen what Bitcoin and all that stuff has done. And I'm just like, okay, let me go ahead and see what's going on. Let me just, buy some Dogecoin. I'll put a couple hundred on Dogecoin. Before I did this, before that, I bought Dogecoin back and I want to say 2018, 19, y'all. So if you're looking on the screen, I bought Dogecoin right around here. I want to say right around here. It was like 2018 leading up to 2019. So probably right around here. So sometime between 2018 and 2019. I bought the Dogecoin and it was just sitting there for about a year. It literally just sat there in my Robinhood account. I got maybe it'd be a good idea to see when it came. I think this is probably this little hump right here is probably when it got on Robinhood or something. You know, a little bump. So I bought it. It was on Robinhood. It was available. It was one of the few cryptos that was available there. I wanted to get some exposure to crypto. Okay, fine. I think at the time I also had Coca-Cola. So shout out to the folks that held Coca-Cola from that period of time. It literally did a fucking 10x. So if you want to go and look at your financial charts, Coca-Cola has been crazy. I bought that shit around 200. Unfortunately, I sold it around 800 or something like that. And yeah, Coca-Cola, I will say no. I want to say 600 to 800. I wrote it to 800. So I think I bought it. I think where I was looking at it was around 200. I didn't buy it, or I think I did buy it, and then I eventually sold it, and then I bought or rebought it again because I like dividend stocks. Coca-Cola is a dividend stock. Coca-Cola, you know, Berkshire Hathaway, all that stuff, Warren Buffett, all that shit, blah 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 blah. So Coke was always one of my portfolios. Unfortunately, I sold out of that because I wanted to get into stuff where I can get a better return. And I shit you not, I shot myself in the damn foot on that because I sold Coke, and I'd be damned if Coke wasn't over $1,000 right now. That shit, I don't even remember. I don't even remember. I looked at Coke and I was like, what the fuck? It literally looked like a damn crypto parabolic. It looked just like this. If you shot this off, Coke literally looked like this. Over the last like 5 to 10 years, I was like, what the fuck? But you know, that's not normal because it doesn't look like anything else. Maybe Tesla, then again, there's a lot of scamming and bullshit with Tesla. I've never been a fan of Tesla. But I do miss my Coca-Cola. I wish I would have kept it. Unfortunately, it was one of the things I liquidated because I was moving my portfolio around. I was trying to gain exposure to things, and at the time, I had some crypto, sold it. Now this is what I did: the hundreds of dollars of Dogecoin, I bought it around here. I think I sold it somewhere around here, and I kept just a little bit. Like it was like literally like a couple of dollars in Dogecoin, and I set a little limit order. I was like, oh, just in case it does go parabolic. You know, I set a little limit order, but on Robinhood, you can only set a limit order but so much. I think it was like a 10x limit order. I shit you not. This was the time where I had liquidated the cryptos to get in on stocks because I think that was around the 2019 dip. And I was like, okay, this is opportunity. I immediately recognized it. And, you know, coronavirus was going on, markets was dipping. I was looking at some of the stocks. I was like, oh, yeah, fuck yeah, let me get on this. Liquidated the crypto and all the other bullshit I had, and I immediately bought into certain stocks that I wanted. So my investment, you know, strategy has been to kind of set up for what's going to be happening in the next 10 to 20 years. So we have the baby boomers, they're old. So it's actually some of the things were said by Scott Galloway, the luxury thing. So I did like that because I saw the narrative for that. But at the same time, I also got in on some retirement facilities and stuff, which those did in fact do well. By the time I sold them, so retirements, facilities, real estate, REITs, and you know, stock dividend stocks like Coca-Cola and I want to say Microsoft and a little bit of Alphabet, just you know, Nvidia as well. I was just gaining exposure to the stock market. I just wanted that. I wanted to ride that wave. I shit you not. This was around the time the GME thing happened. So let me see when that timeline was. But I remember it was March 24th. Release. No, I'm not talking about that. Say 2019. But let me see here. Yeah, so 2020. So yeah, so remember I said like I sold my shit and I went to get into stocks. So this was like 2019, 2020. So I bought my Doge like somewhere in here after I got on Robinhood. I sold it because I wanted to get into the dip, which happened because of coronavirus or whatever, right? So about 2019, 2020, something like that. So like, okay, cool. It's a good play. I was making returns. Good, I can play. And then of course, around that December, January 2020, I woke up, looked at the stuff. It was like January 23rd, 29th, that week. And the GME happened. And coupled with that, Dogecoin shot up. So yeah, so this is Dogecoin shot up too. Actually, I think it was Dogecoin and then GME. No, it was GME then Dogecoin. Look at this. That was around May. Yeah, so this is after GME. So GME happened. I'm like, oh wow, that's crazy. I didn't have any GameStop because it was a fucking failing company. So I was like, oh, that's crazy. And then shortly after that, because mind you, so I'm looking at GME's chart thing. This was January 29th. And then Dogecoin shoots up February. And I remember I was like, oh shit. I remember I had some of that damn I looked at my thing, my limit order was hit. The damn thing did a 10x. The few dollars that I did leave in Dogecoin. I was like, fuck me. And mind you, the 10x was from here to like here. The 10x was like from here to like here. That wasn't even the full fucking move. Not nowhere near the full fucking move. And I was just like, wow. Like even now, if I still had the damn Dogecoin, it would still be in profit by multiples right fucking now. Like even now, I shit you not. So I made a so-called smart decision to sell my crypto and get in on the stock market dip. Hey, it was a smart decision. Anybody, any financer, any finance person will tell me that was the right move. I had returns off of that. I can't complain about it. I can't. But it wasn't like the thousands of percents I could have had. You see what I'm saying? Now, I'm not saying this because like I regret, that I missed it. Nobody could have predicted this shit. What I do regret was I had an initial strategy and I didn't fucking stick with it because I listened to people that at the time it was reasonable. Crypto was, hectic. It wasn't established as established as it is now. And to be honest, I listened to what other people were saying about it. I did take advantage of the stock market dip back in 2020, but the coronavirus dip is at the same time. It was like I had an initial plan where I was going to stick to crypto and I was going to hold my crypto for at least 4 years, and then see what happens, and then sell out. If I would have did that, I would have got out. Like I said, I could still have my damn Dogecoin right now, and it would still be up hundreds of thousands of dollars right now. And my thing is, I sold out because I wanted to get into traditional finances. Well, I also have another strategy. One of my strategies is the bullshit going on with the financial markets. So of course, in the financial markets, things are going a little crazy with, you had both bonds and the stocks dropping. So this is kind of showing you what's going on in the stock markets, because you have the hedge fund people that are supposed to be for safe returns, less volatile, and then you have the hedge funds, even though they don't really hedge like that, but you have the funds, which they call them hedge funds, but you can call them private equity, whatever the fuck you want to call them. Those funds, which are a lot more risky, and then you have like the Berkshire Hathaways where they buy the indexes. Here's my issue with Warren Buffett, that little slippery fucker. So him and Charlie Munger, whatever, rest and piss to him. They want to talk about crypto. They want to shit on crypto, and by all means, fine. Yet they see the returns in crypto. Yet Berkshire Hathaway and Warren Buffett have gained exposure into crypto, buying projects that are heavy in on crypto. So it's like, okay, on one hand, they're telling you crypto is a shit product. Fine, got it. Buy indexes, buy stuff. Well, guess who also has those indexes and has that stuff, the stock market and stuff like that, the commodities and stuff like that? Warren Buffett and those other funds. Yes, of course they want you to buy fucking stocks, because guess what? As dumb as it sounds, buy low and sell high. I mean, that's literally like it's like EC class level type finance shit. As dumb as that sounds, that's what they do. They already own. To them, they got in on Microsoft. They got in the same way I got on Dogecoin. They got in on that shit when it was down here. They were able to supply capital and stuff before those companies went public as angel investments and stuff like that. Like Warren Buffett and his strategy for how he got to where he is, folks, you do realize the majority of his wealth came after he was damn near like 60 years old. I think it was like 90% of it or something like that. So it's ridiculous. Most of his wealth came after he was already old enough to fucking collect Social Security. So you're not going to get his results. At the same time, he was in on a market, an early market, mind you. He literally saw the birth of like the foreign exchange markets and shit like that. Like he saw the birth of indexes and stuff like that. Literally at the bottom, the birth of them. And look at those markets today. Yes, of course, they're not here anymore. They're up here. So yes, of course, he wants to tell the younger generation to buy those products, to buy the, because that's what those are too. Those are financial products. That is what banks sell. They sell financial products. Yes, you can tell me about the whole commodity thing, but let's just be real. When's the last time you actually took an order of fucking milk? When's the last time you took an order of barrels of oil or gold? No. They are just, I'm looking at this chart. You can trade oil, you can trade milk, you can trade hell, fucking corn, all that shit, the commodities. Yes, you can trade all that, but you're not trying to get any of it. You're just trying to gain exposure to it and trade it. There has always been speculation in those markets. Always. The thing with crypto, it is for the first time that I can think of, other than the tulip mania thing that happened way back in the day. But even then, tulips are tulips, they're fucking flower. Crypto is literally, just think about this from a product perspective. Crypto is, that I can think of, the first financial product where it is literally purely speculation. There is no real world asset linked to it. It is based purely off speculation. Guess who likes speculation? Traders. What does speculation do? It makes the market volatile. What does volatility do? Those are the markets you can make the most money. You can also lose the most money. Yes. But you need a market like this that goes up and down, because going up and down is what you trade. Going up and down, volatility is how you make money in the markets. Now, the more money you have, the harder it is to get in on some of these markets. But guess what? You can trickle in. That's how the large funds do it. They trickle in little by little. Let me put a couple million here, a couple million there. That's literally how they do it. That's how they always done it. Trading on the foreign exchange market, Forex, the most liquid market on the planet today. You're not going to be able to move the market there. You're literally trading against fucking banks, central banks, the wealthiest entities that have ever existed on the face of the planet. That shit is liquid. You can place an order for a couple hundred million, easy. Crypto, you can't do that. So crypto is the poor man's foreign exchange market, because you can get that volatility. You can get in and out of your positions. You can make a lot of money, a lot of money. I just liquidated a position. I just liquidated. What is that? So I couldn't Phantom, but I bought Phantom when it was a couple of cents. Phantom went up to like 80 something cents, and I sold it. I got like a damn near, it was like a 300% return off of that. I was heavy on Phantom. That was actually one of the largest holds I had. I sold it. I put it into other projects. One of those projects was Agave. Agave. I bought that. I looked at it in my chart. I bought that in 2021. So 2021, I want to say it was about 40 something bucks when I bought it. Yeah, so I bought it. I think I wrote it up, because I remember I wrote it up. I bought it like $47. It might have been 2022. No, it was 2022. Sorry. So yeah, it was 2022. But I bought it like $40 because it went down probably somewhere around here. I look at my wrong stuff. Let me see here. But I bought it for the cheap. I bought it for the low. I just sold some, still got some. I like the platform. I use the platform. I've taken out loans on the platform. Yes, you can take out loans on your crypto. So that's what I'm saying. It's a financial product, folks. I took out and cashed out loans on my crypto. I got a short position. Wow, that's probably a thing. That's like a big like what the fuck? Yes, one of the downfalls of crypto is you can't really properly short it. Remember, it's an early market. Short selling, which is what the financial markets are setting up now. You now have Bitcoin futures and all that shit right now. So like I said, financial product, remember what I said. So short selling, you have to have some structure to it. Bitcoin, it's a thing where you have to actually have it. It's kind of like if I were to short gold, I'm gonna, at least digitally, borrow the gold from whoever the broker is and sell it on the market, and then I have to give them back the same amount of gold I borrowed. So I'm hoping that the price of that gold that I have to then buy back from the market and then give them back when I short sell, I'm hoping it will be cheaper in the future. So I actually also have a short position on crypto currently. So I bought some crypto. I put it on the Aave platform, and I think it was somewhere probably when everything was up. And then I took out a loan against it for cash. When everything was up, then everything dropped. And then I bought back the crypto and paid off the loan. And right now, I did the same thing again. I took out a loan on some crypto, cashed it, and now I'm waiting to pay back that loan in crypto after the market dips again. Now, it is risky, but at the same time, I also have exposure to the market. So if the market doesn't go down, guess what? The other side of my portfolio goes up as well. So whether the market goes up or down, I don't care. Either I get to pay back the loan cheaper or I get to hold on to what I got. Now, I did liquidate some of my crypto because I am anticipating a little dip in the summer. Probably not down here, but like, maybe around this range. I'm anticipating a dip in crypto, and then I'm going to buy back some. I'm going to pay off some of that loan. Depending on how low it goes, I'll pay back the loan, and on both ends, that's what I want to do. That's my plan. That's my scheme. So don't go into this blind. I can't really, like, most people they don't know all this stuff. They don't know all the platforms you can use. Yes, you can take out a loan and you can actually do a synthetic short position. Yes, you can. It is totally possible. I use USDC on Aave. So here's what you do. You go on Aave, you put in whatever assets you do currently have. Preferably stablecoins, USDC, USDT, preferably USDC on my behalf. You can use DAI, DAI. But you use a stablecoin. You supply to the Aave platform. Now you do earn a yield. So you earn a yield on whatever on the Aave platform. You earn a yield on their platform. A little depending on how much is on the yield, supplied on the yield, and how much is taken out as a loan. It just depends. I'm getting a yield anywhere between 2% and 8%. I've had that shit sitting in there for at least 3 years. Maybe a couple bucks, just letting it sit there for at least about 3 years. The platform is legit. So as it has been getting more and more legit, I've been putting more and more into it. Of course, I don't have everything on there, of course, because I don't know, maybe overnight something could happen to it. That's fine. I already have my stuff because either way, if the platform goes down, I don't have to pay back the loans. I have the other stuff in wallets. So even if the platform goes down, I have the loans. I have the short position. You see what I'm saying? I don't have to pay that. So preferably the platform keeps running as it is, and it is. Nothing's happened to it. It's been up and running for years. Great. So you take your stables, you put it on the platform. Now the stable coins is pretty much just linked to $1. You put them on the Aave platform, you earn your little yield, and here's what you do. You go and borrow. If you want to do a short position, you borrow. Of course, you want to wait until it gets up, and what you do is you take your stable coins, and when you see the market kind of tough one out like here, you then borrow crypto. So you borrow like a chain link or something, or Ethereum or whatever's on the Aave platform. You can borrow. You take it and you borrow it as a loan. So they loan you Ethereum. You take that loan, and then what you do is, as the market's still jumping around up here, is you then take that borrowed Ethereum that's in your wallet and you take it to another platform. I used the Polygon network. That's actually another one of the tokens that I got in on. Also, with that too. I think it was like a 2-3x because Polygon did its thing. Now it used to be Matic, but I've always been on Polygon because Ethereum was always a lot. Of course they kind of did fix Ethereum now, but this was back, early in 2020, 2021, and Ethereum was having a lot of issues because it cost so fucking much. Shit, they're probably gonna do the same thing as Sol, so I can't really look at the whole price chart. But actually, where it is now, I bought Polygon. It was probably about where it is. It was about 20 cents or less. Of course, you can see where Polygon eventually went. It went up to like $1 or something. So yes, I did cash out when it was up here. I absolutely did. And then of course I poured that into the platform and all that stuff. I still have some of my Matic, although most of it I kind of swapped for other things like stablecoins and took out loans against it and all that stuff. Because that's where I said I had the short position. So I then, I've always used this. It's been fast. It's always been pretty cheap. There's also another one of the platforms I used on it is called QuickSwap. So I use QuickSwap. So this is all. So this is the Aave platform on the Polygon network. Now it's called Pol, but Polygon network, which is Ethereum. I want to say like layer 2 or whatever you want to call it. And I'm just doing this to show you what the QuickSwap is. So you go to QuickSwap. This is CoinMarketCap, the website. It has all the cryptos and all that stuff. So you can go to the website right here. QuickSwap. Hopefully it doesn't connect to my damn wallet. But blah 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 blah. Launch app. So you go to the Aave platform. You swap your stuff. It's not connecting to my wallet. Of course, you gotta connect your wallet. I use MetaMask. So if you don't know what any stuff is, but I'm just talking to folks that are already into crypto. So I have my MetaMask. It's on my browser. It's connected here. I also got my cold storage wallet and all that shit. Great. I say I think you took out a loan to Ethereum. So you took a loan on Ethereum. Great. You now use this. See the USDC. This is the DAI. Oh shit. Let me see. Just wrapped Ethereum. It doesn't fucking matter. Still the same thing. ETH. Ethereum is just wrapped Ethereum, but let me see. Here we go. ETH. So you took out the loan on Aave platform. The Ethereum will then show up in your wallet that you took out the loan. You took a loan. You put in your stablecoin. You can also do it crypto, but for me, I doubled it. I used some crypto, but I still paired the stablecoin on there. So you took out the Ethereum as a loan. You now, if you want to do the short, you now have Ethereum in your wallet that is roughly at the value you borrowed it at. Probably went up or down. It depends. And when you get to a point in the market where you're certain, like, okay, I think this is the top of the market. When you get to a point in the market, wherever ETH is, you got the ETH on Aave. Then when you get to a point where like ETH goes up, you bought it at 1,000. ETH came up to 2,500. Great. I think this is the top of the market. Awesome. You then go cash it out. Bam. You take your ETH. Bam. Let me cash it out. This solidifies the short position because now you have that money from the Ethereum in your wallet. Now you swap the Ethereum. You can also do a little by little. Like say you got 5 ETH, and then you just sell like 2 ETH at 2,500. You sell another ETH at 2,600, and then you sell the rest of it around 2,000 because it's dropping. Great. Now Ethereum drops. I'm telling you what I did. Now Ethereum drops. So it goes up. Bam, bam, bam. Crazy. Actually got up to like 3,000, 4,000s, whatever. And then Ethereum drops. It's now 1,300, now 1,200. Great. Now you go back. You spent initially, you spent 2,500. You sold it for 2,500. You now go back. You now buy that same Ethereum back. But it only costs you now 1,200. You spent 25 for it when you borrowed. You now have bought it back for 1,200. Great. That's great. It got back cheaper. So now, because mind you, when you do the borrow on Aave, the Ethereum also has an interest rate as well. So this is actually very similar to how you would do a short position on certain, large platforms. It's how can I say it? Of course, I don't want to say margin, but that's if you're leveraged. But some platforms, if you do some sort of leverage trading, you will have like some sort of interest that you pay. This is usually for like the larger traders, like if you trade hundreds of thousands or millions of dollars and you have like a legitimate platform where you're leveraged on commodities or futures or something like that, and you actually have to pay interest for your position. So it's similar to that. Now you bought it at 2,500. And whatever the other prices was, let's just say your average was like 2,400 because you sold it in increments. You sold it at 25, you sold it at 26, and you sold it at 2,000. Great. The market goes up, it comes back down. Actually, it went up to 4,000. So I'm just giving an example. Now you bought it back at 1,200. So great. So now you just got a 2-for-1 average. On average position, you buy all the ETH back. You buy the 5 ETH for 1,200 each. You then go back to Aave, and then you pay back the loan, and you still got the rest of the money, which is technically, let's say 1,200 each ETH. You still got that in your wallet. So you just made money on Ethereum going down. You made 1,200 on ETH times 5. You made $6,000 just watching Ethereum go down because you did this play. I'm currently running this play. I could have waited a little bit because of course the highs now aren't the highs then. But then again, the market typically goes down, where it is. I've already sold some of the positions, so I've already trickled out for a small profit on some of the short position. But like I said, I'm anticipating a dip, whether the market goes up or down. I don't care. I'm making money either way. This is the way I short the market. This is how I get my short sell position on. Okay, I'm just showing you this for reference. I'm showing you this because this hasn't. I was considering making this type of strategy, but I had another crypto project, which was actually real world asset art. This was back when NFT was going crazy, and I was like, okay, you all are fucking crazy. None of this shit actually does anything. You can actually use it for something. I couldn't get the damn project off the ground because there's too much scamming and craziness going on. So I still got all the resources from it. I just haven't been able to find someone to actually help me build it. But whether or not I touch on that project, I don't know. I still got all the stuff. Amazing designs, by the way. I mean, I just fell in love with the idea, and I just couldn't get it off the market. I bought Aave. It was $47, 46, $47. It was 280. I sold some on the Aave platform, and then I left it in the platform. You can actually see currently Aave got even better. You can now leave your stuff on the platform and swap it. So the stuff I'm loaning to the platform, you deposit it onto Aave because you have to deposit on there, and then you take a loan against what you deposit. You're earning an interest on what you've loaned. You're paying an interest on what you borrowed. I swapped my Aave on Aave, kept it in there. I'm still earning the interest and all that stuff on it. I'm waiting for something to happen. I'm waiting to see what happens, and then I can swap it back into crypto if I need to, or I can just take my money out if I need. Either way, Either way, I've literally made, what is, I don't know what the multiple of that is. It was $47. It was like a 5 or 6x. I don't fucking know. But obviously my math skills aren't that strong. Of course, I'm not that geeky. But let's just see what that is. So, because it was like 289, I want to say. I'll say 47. Yeah, that's damn near 600%. So right there, and that pays for minor little losses. Yes, I've lost money. Yes, I absolutely have. I did not go ape shit crazy into any of these projects. I only put because remember, you don't have to put that much. Remember, Dogecoin. I only had a couple bucks in there. I used that to buy stocks and stuff, and it still continued going up. I only had a couple bucks in there. See, the shit coins. Here's what people get wrong. Here's where people go wrong. They buy the shit coins. I don't buy shit coins. You know what I do? If I want to speculate, I'll put $10 into it. Mind you, the $10 that already just came out of thin air because I already made money off all the shit. Okay, there's a coin, there's a project. Let me see what it does. Let me put $5-10 in there. That $5-10 can literally turn into $500 overnight just because it does this. Because that's what I'm looking for. Whether or not it does, whether or not it goes to zero, like SafeMoon, yes, I already called that one out too. I told people it was a scam, but I was just waiting to see if it did do anything at all because they had a lot of marketing and shit going on. There were a lot of people talking about it and stuff like that. Did I sell some of it? It eventually went, scammed whatever they pulled down. Of course, they just exploit on it because I remember I went to it, I forgot that I did have in there. Because what I tend to do is if I sell something for a profit, I sell some of it and I'll leave some of it in there, just to just let it sit around just in case something pops. And I remember I had forgot, like I already took out what I needed from it, and I forgot that I had some safe moon. I went and looked at my damn wallet. I was like, I'd be damned, I still got some damn safe moon. I went to try to transfer it to cash out because apparently they did some sort of bridge and on another like 2.0 or some shit like that. And then they put an exploit where if you tried to transfer from a wallet to a wallet on the old chain, it evaporated. And that's what happened with the remaining safe moon. I remember I was like, these motherfuckers. I remember I looked up. I was like, what the fuck happened here? And it was only like, couple $100 and like $200. It wasn't that much. And I was just like, what the fuck? Like, it would have been nice to have it because I could have poured it into something else. But shit happens. That is what it is. And I already got what I wanted out of it, and I just, that was money I had to play with because I already made other money on other stuff. When I got into crypto, first thing I bought was Chainlink, which is a legacy crypto. I did my research. I researched all the crypto. I bought into the major projects that I knew they had some work, they had some development, they had some stuff behind it. Cardano, Phantom, now Sonic. Polygon used to be Matic, now it's Pole, still Polygon. I like the network because it was so quick, it was so cheap. It was nice tertiary to Ethereum. I did have some ETH, I still do have some ETH, but I don't use the network like that. Even though the network has gotten cheaper, so I have been transferring some stuff on there now. Thank God they fixed that shit because back then I could not use ETH. It costs you like $20 just to do a damn transaction. So if you're like just trying to send like $200, $300 in ETH, then it costs you $20. Whereas on Polygon, it really costs you like 1 or 2 cents. So yeah, I bridged everything over to Polygon. I just use Polygon. Now Ethereum's gotten a lot better. I mean, it's still more than Polygon, but I still prefer Polygon if I can because it's just so cheap and reliable, and I'm used to it. Algorand, unfortunately, that one has underperformed. Unfortunately, did get some yields out of it, but it didn't perform as well as I hoped it did. Unfortunately, I repeated the cycle with XRP. So similar thing I did with Dogecoin. I had some XRP when it was cheap, and then it hadn't done nothing for like a year or so. I think it was like 1 or 2 years. It hadn't done nothing, and there were some other projects I wanted to get into. So I liquidated my fucking XRP, and I'd be damned if a few months later XRP, like, now this is this year, this is 2025. I'd be damned, like I think it was like January of 2025. I fucking sold the XRP because I liquidated it to buy some other crypto stuff. Because I was, I wanted to rearrange my projects. And I was like, XRP hasn't really done anything. Again, like I said, if I had just stuck to my original plan, I want to say it was like right before I did this. It might have been late last year then, because it was before this happened. So it had been late last year then, because now currently, we're here. But yeah, it was like somewhere in this time frame, so, late last year. And I'd be damned if they didn't do this. And I was like, I'd be damned. I did the same thing I did with fucking Dogecoin. I'm trying to listen to reason, because I'm like, okay, XRP, I hadn't heard none from it, I hadn't seen it do anything. Okay, let me transfer it into something. I think I might have sold it and gotten into Ethereum or something, which isn't bad. Like I said, Ethereum's up too. But at the same time, it didn't go up the percentages that XRP. That's the thing, percentage wise, it didn't go up. I still put in Ethereum. I'm up on my Ethereum. That's fine. I think Ethereum was like 1,200 or I got in pretty cheap on Ethereum. So I'm not mad because I still, what I did put it into was the smart choice. It was Ethereum. So no one's gonna beat me up for fucking buying Ethereum when it was cheaper. So I think it was same year, 2024. So yeah, I think I got in. It might have been Ethereum. Because my Ethereum was cheaper than this. So no, it wasn't Ethereum. It was another. I think it was another miner. My Ethereum, I bought it. It was like in the teens. So yeah, it was like down here. I bought my Ethereum. So that one, I didn't buy that then. I must have bought it. I might have put it in some other little smaller projects. I know Tron did well. Yeah, I bought some Tron a while ago, and that network. It had underperformed. I'm glad I held on to this one because I bought this one. It was super cheap, like a penny or two, and of course you see where it's at now. Great, got a nice return out of it. And luckily, when I did look at the XRP, and I shit you not, I remember I looked at my Tron too, and I was like, should I do this one too? And I am glad I didn't because I had bought the Tron years ago. This is because remember, my plan was to hold on to it for 4 and 5 years. I bought my crypto between 2019 and 2022. That's why I bought the majority of it. And I just rode the wave. And the Tron, I'm glad I held on to it because, you see where it's at right now. Great. And that was like I actually forgot about the Tron. I was like, okay, glad I left it in one of my little side wallets, and it just just did this. So that was great. That was a good return, nice return. And I'm glad I didn't liquidate the Tron. I just let it ride. But I did make some mistakes. But then again, are they really mistakes? I get in on a little smaller project or something like that, and got some yield out of it. Like so it's stuff like that. So you kind of have to. If here's what I will say: you want to get a major project that's got some sort of backing behind it. It has a decent. Tron kind of has a somewhat of a bit of a shady history, apparently. But I got it on the project because I had seen like there had been a lot of developer action. You can look up the developer action, all that stuff. There was a lot of talk about it, and I was like, okay, I don't really like the project, but then again, like I said, this is investing. So yeah, I might not like the project, but it has all the metrics. So I kept it. I bought it a little bit, a small percentage of my portfolio, but I got it, and it did well. Okay, and that's kind of what it is. It's like you just kind of have to see where it goes. Solana, I do not like Solana, but I'm looking at the price of it. It could be anywhere from 250. So Solana can at least 2x by the end of the year. I'm just not in on it. I got other projects. I've never liked Solana, especially since it fucking crashed. Yeah, it did a nice little pump, but I've never liked Solana. But I'm just telling you, like these things, don't overthink it. Stop trying to jump for like all these little shitty coins down here. Even fucking, like the Trump shit. Never bought Trump. Don't fucking fart coin, all that shit, dumb shit. Yeah, it's just don't. Like, and they're gonna recommend them. Like the one thing I hate about this shit is you go to the damn charts and it's so misleading because if you were to look at like the largest gainers or something like that trending is most of the time it's a bunch of shit coins like Kava with the Kaka. You see what I'm saying? Like poo poo Kaka. Like dumb shit like that. Just Sui is a project where I had to do, I had to look into it. Bought some of it, but I'm not too familiar with it. But like I said, the metrics, it's there. So I'm like, it's kind of like the Tron thing. It did do a nice little pump. I want to say, this past year or so. I did not ride that. I just bought it recently, so I'm just gonna see what happens with it. If it does another 2-3x, great. But I bought some. Current price is like $3. That's fine. If it goes up to 120, I'll buy it. But like all the little shitty coins and stuff, I do have some AVAX. That's the newest one I got in on. It was AVAX. So I did buy the AVAX. I still got my Cardano. I've had my Cardano for years. So that one, it's paid me dividends over the years. I literally just staked it the whole time, just churned them out, just churned out more and more. And that's the one. This is one of the first crypto chain. I don't know what type of investment I got. It's a safe point. I'll say safe. It's a staple in the crypto market. I was like, what coins have a use case? Chainlink actually has a use case. It does, data, kind of like what GRT does. Let me see if I can read what it says. But Chainlink does do like the data part to crypto. I think it was like the dexes and stuff. They need some way of making their contracts work, behind the scenes. So it's Oracle Network. I was like, oh, great, decentralized Oracle Network. Okay, big on decentralization. This is kind of what they'll use instead of using like Amazon Web Services or something like that. They use Chainlink. So you can just read this yourself. And this is what their back platforms are. I'm like, okay, if a lot of cryptos use this, okay, let me get into this. So this was the first crypto I bought was Chainlink. It was available on, I think, Coinbase. Eventually, I got into the crypto networks and stuff, and I got away from Coinbase and Robinhood, and I went to the trenches of the crypto market. Loved Binance, and then eventually Binance got trickled out, and then they made Binance US, and then they made all the fucking regulations. I'm in North Carolina, and they changed the regulations, so I can't even use Binance no more. Binance was my favorite exchange. It had everything. It was cheap to trade. Coinbase is now a little cheaper to trade, but Binance, especially if you had the BNB, which I did, that's not a token. Was BNB. BNB was $600. I had BNB. I bought that shit when it was like 200-300 right around here. See, 2022. Bought that shit around 223. Yes, I just held my BNB. Now I did eventually sell it because Binance, I didn't have my Binance. So the way Binance work is you have BNB and you actually pay cheaper fees trading when you were on Binance if you had BNB, if you use a BNB account. Well, I didn't have Binance no more. I don't have Binance, so I liquidated my BNB. It wasn't 600. It was probably like 400 or something like that. Yeah, I liquidated somewhere around here. Probably 400 or 500. So even then, I still had my Binance. I had it around 200, sold it around 400 or 500. You see what I'm saying? Like, so stuff like that. So yes, you can get the gains. My crypto portfolio has done significantly better than the stocks. And I mean, not shit on stocks. So it has some decent stocks. One stock I had was Mama. That actually was probably one of my better performance. Of course, it suited into my strategy, which was the restaurants. People, they got the money, they like to go out and eat. They don't want to sit at home and do all the shit. So yes, Mama did very well. If I can look it up real quick. Let me see here. Look at Mama. This stock. This is one of the stocks one of the best performing stocks I had. I bought this stock. Hopefully, I didn't show it. Couple years ago. Like I said, it fit into my strategy. Currently has been going down. I sold it actually recently. I bought Mama. It was real cheap too because I like the chart. It was like $1-2 and I bought it. So I did have my Mama. It fit into my strategy. So you can see it's $1-2. Bought that, rode it up, bam, sold it for about 6 something. So I sold it around here. It was like 680. Just recently. So it's like, maybe this recently. And I just have it sit in my account. The profits from that. So that's one of the actually that's probably the only stock that I can think of because I sold the Coke. I didn't ride the Coke. Nvidia, I didn't get a chance to ride all of that either, unfortunately. So yeah, that's the stocks that I actually held onto during their pumps. That's the one that actually performed like crypto. I didn't, I got returns on the video. I got returns on uh, Coke, but I didn't hold on to it the full move. I got maybe like close to 100%. You see what I'm saying? But I didn't get 400%, 600% like with the recent AVE thing. Like I didn't get those returns. So what I'm saying with this video is crypto, don't fall for the hype, the nonsense, like the NFT shit. Like I remember the NFT thing was going on. I was just like, this is bad for crypto. Like this is the use case, the ridiculous prices, the wash trading, which I knew was happening. If you want to know what wash trading is, you can look that up. That's actually what one of the things my platform was going to address. But I was like, this is just too much scamming. And you know what? You can avoid the scamming by just not buying the shit coins. Stick to top coins. If it's not in the top 500, don't even bother. And to be honest, I'd say top 100. There's still going to be some little projects like this. I don't know about this. I had VeChain. Do I still have my VeChain? I think I liquidated it. Yeah, I think I liquidated my VeChain. And you know what? Hit or miss. I'd be. It was because it was like 2 cents. It would suck if VeChain goes up like 20 cents because I did have a lot of VeChain. I was in on that project. Unfortunately, it did kind of dip. I still got my Atom. I'm still holding that. This is one of the newer projects I got in on because of AI, and it actually is a merger of a couple of other projects that were up in here. So that's why I'm in on that one. So FET. So if you're watching this, I'm just letting you know. This is one of the projects I'm in on. Is Fetch AI, which is Artificial Superintelligence Alliance, because they're doing some sort of merger there. Well, anything happens from that, don't know. Filecoin, I had some back in the day, but I think I got rid of that. Quant, I think I'll look. That's what I had on Binance. Some of these things I had on Binance, I liquidated them. I think Flare was one of them. Probably Injective was one of them. But I had to liquidate it because I couldn't get them anywhere else. Like some of these projects, you literally can't get them anywhere else until they show up on like an exchange like. Well, at least I can't get them. I think Binance US still does work in some places, but you gotta in certain states. So, fortunately, some of the markets aren't. Oh wow, I'm surprised Sonic is so low. See, Sonic when it was Phantom, it used to be a lot higher on the chart, but now some of these. I mean, even though some got $1 million market cap, but Graph is another one similar to Link. I'm surprised to see it down here. It's still in the top 100, but I'm surprised to see it at 7. It used to be like up in like the 40s and all this stuff. But Graph is another one similar to Chainlink. It does the whole the data thing. Nexo was the one I also heard about. PancakeSwap, that's actually one of the exchanges. So Binance had their own network, Binance Smart Chain. That thing was also just as quick and probably even cheaper than Polygon. The Binance Smart Chain, this is the major exchange on that. I actually still got some, I think, cake or whatever on that platform. Some of this stuff I just let it run. So that's just been on there for like a couple years now. And I go check up on it just to see if it's there. I think I did check up on it last week or week before. It's still there. Some of the stuff that you kind of have to be careful because they upgrade the platforms. I think it went like version 3 or 4 now. So you have to kind of migrate them over and all that shit. So you do have to keep an eye on it because they do that kind of stuff and you got to transfer it over and all stuff. So there's some maintenance, but it's like every few months, just check in and see what's going on. BitTorrent was another thing I had on Binance too, and like I said, so I'd say stick to the top 100, but go for these some of the products I'm aware of. That's the crypto.com token. You use credit card, and also you can use this BNB token to pay for trading fees on crypto.com. I haven't been active trading. I've been more so like buying and holding projects. Polkadot, that's the one I'm big on. It does Polkadot and Cosmos-ADA. Those two are kind of looking to kind of like utilize all the different chains because each chain has its own thing. Each chain has its strengths and each chain has its weaknesses. Each one can be used for a certain function. The reason I'm the Avalanche thing is because it came in. Avalanche is apparently very good on gaming. Has some pretty major studios working on games specifically for the AVAX chain. So that's why I bought in. Actually, I might want to buy some more. But I've got it around the 20s, and Avalanche has the potential to get up to the 40s, 50s, 60s, maybe even higher. So I got that one. Stellar Lumens, I used to have that. That's compared with XRP. It also shot up too. I like I said, I liquidated that well before my XRP though, years ago. Um, but each chain has its strengths and weaknesses. They have their purposes and all that stuff. And here's what I will say about Cardano. Here's what I've been digging on Cardano. When it comes to what a crypto actually is supposed to be, people think of Ethereum, and then people think of the new Ethereum, which people want to say Solana. I've never been big on it, and maybe even AVAX at a point. But what I will say is, when it comes to use case, when it comes to function as a crypto, Cardano, there's no other network I've used that is like Cardano. This network, it's always been relatively cheap. It has always been, the platforms that are on it, they've always worked, so long as they're not, shitted on or shitted out or whatever. The two major ones I use, MinSwap. I mean, I will say they don't have as many. Well, I mean, now they probably do, but at the time they didn't have as many exchanges and indexes and stuff. Now they got a lot more built out. I haven't actually been able to look into everything they have currently on the network, but I do, move stuff around on the network. And I'm not gonna lie, you can really, just similar to Monero, you can send stuff on this, and it really is, you can't see that shit on the chain. It just works like it's supposed to. And when I say about that, it truly is. Then this is probably one of the reasons why it hasn't, why the I can say like the powers that be don't really like it like that. Is because this shit really does work like crypto is supposed to work. Because Bitcoin, contrary to what you think about Bitcoin, Bitcoin is not. Bitcoin is not. Bitcoin, listen on that. Bitcoin is not private. There is no secrecy, there's no privacy to Bitcoin. None. You can see everything that moves around on the fucking network. Everything. I send money to somebody, I literally just go look at the transaction and I can see if the money's still in their fucking wallet. Bitcoin is not as anonymous as you think. To off ramp that money, unless you keep it on Bitcoin and you never take it off Bitcoin, you cannot use Bitcoin to buy like houses and stuff like that yet, at least. And so to live off of that, you have to cash it out at some point. And to do that, you have to send it to some off ramp. To do that, you need a bank account or something for whatever currencies you have. And even then, you can track it from wallet to wallet to wallet to wallet until eventually it hits an off ramp. And there you go. So Bitcoin is not anonymous. No, not at all. Cardano, you can't see shit on that if you don't want to. Because the way it functions, you can literally change your wallet address every transaction. And I'm not even gonna lie, this shit works. You can't track on Cardano. And of course, I see why the powers that be, you can buy and all that stuff, but I see why, the powers that be don't invest into it as heavily as they have done with Bitcoin and certain projects like that, because they can leverage that, they can use that for that. I have a narrative on that actually. I do believe the CIA and or the US government, maybe some sort of shadow organization, does have some play into Bitcoin. They can be using it to finance their shady dealings overseas and stuff like that. So they have their reasons for Bitcoin. They're already in on it. Now they could also have reasons to use, if they wanted to utilize Cardano. This actually would be a lot more effective. But like I said, Bitcoin, you can actually track that money. So they give money to whoever someone is. They can see what they offer him and all that. Blah 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 blah. They can follow the money. They can literally follow the trail, the breadcrumbs. Cardano, you cannot do that. It's similar to Monero. I think I'm pretty sure it's Monero. I use Zcash for some transfers because I had up left, but Zcash isn't known for being, secret. Actually, Monero is actually up too. Oh my god. See, I haven't checked on Monero in a while, but yeah, they're damn near they're past all time. So that means somebody's using this network Remember how I said to move in secrecy? Yeah, someone's been moving in secrecy on Monero because you can't do that with Bitcoin. So you have to use other projects like other chains like Monero. So this is the privacy. So this addresses the Bitcoin privacy issues. Now they did add something to Bitcoin. I don't think you can actually use Monero Bitcoin. I don't think Bitcoin branches into Monero. But this is a privacy coin. So you can actually use this and people can't track your transactions. Looking at this chart, actually, I haven't looked at Monero in a while because I haven't used it in a while. I got Cardano, but this shit is damn near to the all-time highs from back in the day. So yeah, there's been some action on Monero for big time. Somebody's been trying to move in secrecy on Monero for sure. So I'm actually gonna look at this. I gotta do some digging on what's going on here. Cause yeah, somebody definitely did. What is that date? So this is the recent pump, possibly on Bitcoin too, 525. Just simple shit like this. You can do a little research just like this. Of course, there's other chains. You can Sentinel. So look at this. See, recent pump, 525. Yep, correlates roughly with the recent high, all-time high of Bitcoin. By the way, 111,000. By the way, so to all you folks back in the day talking about Bitcoin. Now I knew Bitcoin to 100,000 was a bit stretch. So when it topped out around 60K here, I never go for what everyone's saying. Bitcoin 100,000, Bitcoin 100,000 here. I already knew. I was like, yeah, I don't know about that. So when it did its little thing around 60K, and then it dipped. But then look at here, the bottom, look at the top of the prior market. I'm just showing you just for reference. The prior top, just under 20,000. Bitcoin has never been back below that prior top, 16, 17,000, roughly. It's like right at it, 17,000. Yeah, so I think for a minute, I think right here is where some large folks got in big time because you can see as soon as it dipped back, right around that prior all-time high, look what it did. It immediately shot up to 20,000, and ever since 2023, Bitcoin has never been below 20,000. So anybody that bought Bitcoin 2019, 2020, and after the dip 2022, anybody that bought Bitcoin from that period of time has at least seen a 2x, at least, if they just bought it and just kept it, at least. What am I trying to say here? Well, will it do 2x? It's possible. This is a big market. It is nowhere near the size of the foreign exchange market. It is nowhere near the size of even the New York Stock Exchange. So if it were to, I'm looking around 500,000. 500,000 Bitcoin. I'm looking around that. So you got a potential for a potential another 2x. It won't happen this cycle. I'm looking next cycle. Another 4 or 5 years. There's probably another financial something similar to 2019. The recent thing that happened, the recent dip, that was something off of just news. That was not the actual every 10-year type dip. That was not that. That was not the 2008. That was not the 2019. That was not that. That was Trump tariff bullshit. So that's not the actual dip that's to come. There's going to, in the next 4 to 5 years, there is something that's going to happen that's going to shock the market again. We're going to get another dip like that. Okay? And that's probably around the time where Bitcoin is going to do its thing too. Similar to what it did with the whole 2019 thing. And that's going to be something like that. So that's in the future. That's 3 to 5 years from now. Don't know what's going to cause it. Don't know. We never know. No one could predict coronavirus. Well, I mean, unless you were like, maybe you could roughly, but no one could have predicted all of that from the coronavirus. You see what I'm saying? So there's going to be another one. I think it's like every 10 years, there's a major market dip. Every 100 years is a major market, an even more major market. So it's like roughly 10. You can kind of guesstimate. But, 2008, 2019, roughly every 10 years. Not exactly, but roughly. There's going to be a major financial something crisis that happens, and there's going to be a dip in the market. I base that also around my strategy as well. So I'm planning on the next 2 to 3 years, I'm liquidating my stocks. Certain stocks where I think that I can get a better entry. Some of the AI stocks like Nvidia and all that stuff. This AI thing, it's a bubble. I'm seeing it as a bubble. It's just too much money too quickly, too much promise being made, too much, just too much going on. Similar with the 5G thing, look what 5G is. It's nowhere as what they were claiming. You know what I'm saying? It's just useful for cell service when you can get it, but it's not everything they were making it hyped up to be. I'm seeing the same thing with AI. Yes, there are significant use cases. Yes, companies are using them in their back offices and stuff. But I'm seeing it as a solid. It's a useful tool. I use it myself. It's useful, but it's just over. It's just too much going on, and it's too little time. So I'm seeing some of those stocks. They're gonna kind of come down into reason. Not like crash. I'm not saying that, but if Nvidia gets up to like 1,000 a share, and then AI is kind of like, AI, yeah, it's useful, but I mean, that Nvidia worth 1,000 a share, then it might dip down like 500 or 600 a share. You see what I'm saying? So I'm saying that type of reaction, not like a complete and total market. It's still possible. Now, Nvidia is currently $145. I did buy below that, of course, but it's, I think I bought something like $80, $90. Same Disney, but it's not. It could be up to like 300-400. That's a nice range for it because of the products and the chips and stuff it does produce. Yes, big in gaming, big in AI, big in that type thing, electronics and stuff like that. But the AI thing is going to probably pump it. It could get up to like 1,000, 2,000 a share, something crazy. And kind of like Tesla stock. And then yes, I do use to mostly drop too, but I'm looking at that happening when it comes to the AI thing. I don't think it's gonna be. I think it's gonna be like that type of bubble, not complete pop bubble, but like reduced size bubble. You see what I'm saying? Because it's still useful, but it's not going to be as useful as folks are making it seem. At least not in the immediate, immediately. So I'm gonna hold on to the Nvidia and the related crypto projects, but I am looking for my exits. So I'm not diamond handsing and all that stuff. No, I'm waiting for the opportunity, and I'm eventually gonna exit. You see what I'm saying? It's gonna happen. Altcoin season is what I'm currently waiting on. Bitcoin, it's new all-time high. You can follow the trends. You can see how it kind of parallels. We are currently, if we're with this last one, we're probably currently like right around here. Last cycle, you can see over for damn near a year, and then you see where September, that October, that's where it did its last climb. Well, same thing. Lingered over a year. Right now, we're leading up into that September, October time. But that's the altcoin thing I'm looking for, is that second hump, and then eventually, I shit you not, I was watching it a month or two ago. They're the metric you want to look for the altcoin season. And there's this, you can look at the altcoin index, but what you really want to look at is Bitcoin dominance. This right here. So I shit you not, this thing got down. So what you wanted to see is Bitcoin below 60%. And then the index will go up. And you use it as a relative. But what happened about a month or two ago, this dropped down to like 60 point like 1 or 2%. and the altcoin index was like up here, and I was like, oh shit, it's a little too early. And I was a little bit worried. I'm not gonna lie, I was a little bit worried because it was getting too close too soon. And mind you, I'm looking at the market and I can see that there has been some industrial trading going on. I'm familiar with, the foreign exchange markets. I'm familiar with futures, stocks, that type thing. So took a look at Bitcoin, and I was like, oh wow, this looks like a damn foreign exchange pair. And I'm like, and of course you're seeing the inflows into the ETFs and all the money being moved Bitcoin network, millions of dollars. So I was like, okay, yeah, that's industrial. That's the funds. That's the large money, so-called smart money. That's them. They're definitely in the markets. They're definitely fiddling around with Bitcoin. And the altcoin season index, this thing got frighteningly close. The Bitcoin thing, because there was too much money going into, I guess, the altcoin at the time. Because that's what makes this drop. There's too much money into altcoins at the time, and it was too soon. And it was, I think, where was it? You see how like altcoin season happens around here? It drops below 60%. That's when altcoin season happens. See, that's that October, November time frame. That's the prior cycle. And the other cycle, I think it was around this low. Now, see right here, it dipped. Where was it? I want to say it was last year. I want to say it was sometime this year. 60.5. You see right there? Like it was trending down. It did dip. So I took a look at it one day. It was like 60.1%. I was like, oh shit, this is a little too early in the year. It had dipped. And I was like, well, fuck, like this is too early for the altcoin season. Yeah, there was, I think, after the XRP thing too. So, yeah, XRP and all that stuff. But I was like, that's a little too early. And then eventually I saw it start climbing back up above the altcoin season thing. Never got to, the full blue of the altcoin season. At least I didn't see it did that, because now I'm looking at it and I'm seeing it and actually did dip below 60%. But I remember I looked at it and it was like 60.1. I was like, oh shit, the thing's about to dip a little too early. But that's what I'm looking for too. Is I'm looking for this to get up, towards the blue range, like 70%. I'm looking for this to dip below 60%. Sometime between August and October. That's what I'm waiting on. Waiting on that move. So take crypto for what it is. Crypto is, say it with me, crypto is a financial product. No different than the derivative markets. Derivatives are based on stocks, based on, markets and stuff. You have perpetuals, you have options. These are contracts. These aren't you actually doing. You can exercise them, but people rarely exercise those. People rarely exercise the contracts on the futures markets because they're speculating. They're trading the markets. They're making money off those markets. They need the large funds. They need that liquidity that's in those markets so they can move their portfolios like they need to. They can't properly do it on crypto, but I'm seeing how they're setting up. They're buying up the crypto currently so that they can move on the crypto like they need to, so that they can dump Bitcoin. Because, like I said, you can't really do a proper short sell. I showed you the way that you can using the Aave platform. I'm pretty sure there's other platforms like that too. But you can actually do a short sell position without actually buying Bitcoin. You can borrow it like a short seller. But these funds, they can buy their Bitcoin at 20,000, 19,000, like they were buying it back when it was 17,000. Yes, they were buying it. They bought it up. Now Bitcoin's over 100,000. Now they don't have the liquidity to exit those positions as is. Yes, some of them can to make a profit, but why would I do that if there's a potential where this stuff can be used in the future as a financial product where people can trade this? I can eventually get it up to 500,000 versus 100,000 and pump the market. Actually, this next dip might actually be pretty significant because there's going to be some of these fund traders. This next pump, September, October, whatever, whenever it happens, I can see some of them dumping. So Bitcoin actually could dip below that 20,000 marker, that 17,000 marker. It could dip down to like 5, 10,000 maybe. But will it go to zero? I don't think so. There's too much has been done already to eventually establish it. So I don't see it dipping below that far. I don't. I see it being used in the future as a financial product. I see it being used to make money, especially by these large funds and institutions, not just by trading it, folks. Also because it's a financial product. You go to a platform, you create an order to short sell Bitcoin. Think. Follow me. You create an order to short sell on a platform, a financial institution's platform, a brokerage site. That's what gives you access to the markets. They own Bitcoin, just like some of them own certain commodities and stuff. Or some of them might be like I think it's like order book B or something like that, where they just take the opposite side of your order without actually buying the asset. But they can actually have Bitcoin on the Bitcoin network, which gives them the ability to tweak the market like if I were trading it on the actual market here. So they have the access to the Bitcoin network. They own a significant amount of Bitcoin where I can go and sell 20 million Bitcoin. They give me the Bitcoin. It's an actual functioning short sell. So I sell the Bitcoin on the Bitcoin network as an actual short sell on the brokerage website. Let's just say Charles Schwab for now. They don't have crypto yet. They don't have crypto yet, but because they're probably still accumulating and letting it establish itself. But eventually they're going to have crypto. So I can eventually short sell Bitcoin on, say, like a Charles Schwab as an institutional trader. I can short 20 million worth of Bitcoin. Bitcoin drops. I make my money. I then exit my short sell position, which of course the opposite of the short sell position is for it to close, you buy the Bitcoin because I have to buy the Bitcoin back at that lower price and then give it back to the exchange. You see what I'm saying? So I bought the Bitcoin. Now, mind you, here's how Charles Schwab makes their money. I make the money on executing the short sell. They make the money on supplying the ability for me to do that. I borrow their Bitcoin. I pay them a fee. You see I'm going with this? It's a financial product. People trade this stuff. People trade the speculative markets. People love this. It's like fucking it's legal gambling. I'm just gonna go ahead and say it. It's legal gambling. It's legal gambling. The options market, like certain commodities markets, like certain future markets. It's legal gambling, people. But can we let the cat out of the bag? It's legal gambling. Yes, the financial institutions have all these structures in place where they have a leg up in the traditional financial markets. Now they're trying to get the leg up in the crypto markets to make this the new financial product because everybody already knows if I buy those indexes, if I buy those stocks, Warren Buffett already has them. The only person who's getting richer off me buying them is him. I'm just hoping they go up. I'm hoping more people buy those stocks and indexes. That's what I'm hoping for. Well, surprise, surprise. Most of the money is with the old people. Most of the old people have their 401ks. Well, some of them. Most of them have their retirement accounts, mutual funds. They buy indexes. They're already in those markets. They hold a good share of the damn markets. Mutual funds, that's where the retirement money and stuff. Most of the people in America today are retirees. They're about to be retired. We have, for the first time in history, we have more retiree age people than working age people. Working age people from 20 to like 35. We have more older folks, retired folks. We have more retired folks than we have working folks. I've been trying to work a model around that because this has never happened before. This has never happened. So some of the things, like some of the way the market's about to function is going to be completely different than the way it has functioned before. Okay, one of my hypotheses is actually we're actually going to see for the first time in our history for a 10-year period, we are going to see at some point the S&P start a downtrend. Oh my gosh! It's because we're not going to be able, aside from inflation and certain synthetic methods to keep those markets propped up, kind of like what's going on with Tesla stock. Aside from those tricks and gimmicks, technically we should be seeing somewhat of a downtrend happening in the S&P 500. Maybe not now, but within the next decade or two. That should actually happen. We'll see. We'll see to some extent, like S&P 500, where like say a trend, because it tends to go up. It tends to go up. I'll say it like that. But just like I can look here, and you can see, bam, 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 SP 500 has been going up, going up, going up, going up. It actually looks kind of like crypto, don't you think? But eventually, similar to how Bitcoin's market looks, yes, you see every 10 years, you see the dips. So you got the 20, that one. You go back to 2008. So that one actually was a little bit longer dip. This one was actually very, very sharp. But you see how another dip back here, like the early 2000s. I think that was like the dot-com bubble. But see how the dips are happening faster and faster? This one happened a little faster. This one happened extremely fast. This one, you see, like that was another V-shaped recovery, but that was the tariff scare shit. So even that, we're seeing the dips happen faster and faster. We're seeing the markets because, of course, over the years, more and more traders, more and more money has been entering the markets. You see, inflation, more dollars. So remember, the price tag is the dollars. So there's more dollars that exist today than ever. Of course, they did a lot of inflationary reasons, which is why that's really the only reason the market is up where it is right now is because of inflation. But you see, like it technically should be probably like half of that. Technically, it should be like down here back in 2020. It should be like around here. But because of inflation, there's more dollars they pump it into the market. Okay, but we should see within our first, at some point, eventually, especially if the economic situation changes, which eventually it will. People are going to be drawing out of their retirements. Some of these mutual funds are going to have to draw out some of their monies. People are going to, be dying. Some of their money is going to be transferring. There is an estate tax, so some of that money is going to be going to the government. But there has to be a way for them to generate income. And crypto, which technically, if you think about it, is American, because you think about Bitcoin, you can't say Bitcoin without thinking America. The dollar, the US dollar, which is the reserve currency. People are concerned about it. I'm not concerned about it. You know why I'm not concerned about it? Because crypto, it's a financial product. These institutions have the opportunity to make a significant amount of money just from this product. You can trade this. You can do anything with this. It gets around all those little funky little guidelines and stuff globally because you can buy crypto. You can trade crypto anywhere on the planet. Anywhere. I create an exchange. I gain exposure to that exchange. I can buy into crypto.com. I can buy into Coinbase if I want to go the stock market route. Circle, that does the stable coins. They just went public, went up down 200% in the first day or two. You see something like you can gain exposure. That's exactly what's happening currently. People are gaining more and more exposure through the proper markets, but eventually people are going to be wanting to trade this stuff as a financial product. They're going to generate income. Eventually, I'm going to be able to trade Bitcoin on my Charles Schwab account. Eventually, you already have it on Robinhood. They're making buku money out of it. You already have it on these other platforms. Eventually, it will get there. Eventually. And they will be able to make a lot of money allowing this to happen, allowing returns from crypto to happen, similar to the S&P 500. You just buy it and just hold it. But eventually, will this continue on like the S&P 500? I don't know. It will eventually go to zero. And again, everything goes to zero eventually. Will it go to zero 5 years from now? Will it go to zero 500 years from now? Yes, Bitcoin will eventually go to zero. It could go to zero 500 years from now, people. We don't know when that will happen. I'm seeing where this is being used in financial institutions. I'm seeing the potential for it to be used for what it can actually be used for, which is as a financial product to generate income off the speculation of it. Kind of like the VIX. Let me see. The VIX is a volatility index. I do believe it is used with option, like how to calculate options and stuff like that. But it's an index. It's a volatility. It is a volatility index of the markets. That's literally all the VIX is. You look at it, you can read it right here. This is the VIX. It's Google. Remember, this is based off. This is just based off the volatility. Can I trade VIX index? All right. So it's not directly tradable, but pretty sure there is fixed futures and options. Because I was about to say it might not be able to be directly tradable because remember it's not, it's just based off the volatility of the market. It's not, there's nothing backing it. It's just a digital thing. The Chicago Board of Exchanges uses board options. Sorry, Chicago Board Options Exchanges uses to kind of gauge and price their options and all that stuff, right? You can use it for the volatility for the market in general, but you can't directly trade it because it's technically just a metric. But you can get futures, you can tertiary. Remember derivatives. You can use derivatives to trade. You can use VIX futures. You can use VIX options. Why is this relevant, folks? There's nothing more different from VIX than fucking crypto, from Bitcoin. You can look up the VIX index and all that stuff. You can do the options, VIX options, VIX futures, VIX options. In 2006, I'm sorry, when did Bitcoin start its thing? Folks, when did Bitcoin start its thing? Bitcoin, 2017. You look back, one of its first little pumps after 2006. Okay, follow this narrative. Hey, can we make money off a product that isn't really based off shit? 2006 VIX futures and options. Tell me they're not making money off of this. Of course they are. Great. We can actually make, following the successful launch, that means they made a shit ton of money off of it. Hey, we can actually make money off the VIX, because remember, I can use this as a hedge. Remember, what hedge funds, well, technically they don't really hedge like that nowadays. You can consider them private equity or whatever, but I still call them hedge funds because that's technically what they're called. So remember, hedge funds technically they hedge, but the problem with the hedging was, okay, if I buy this one stock and I sell another correlating stock, if the stocks go up, which correlating stock means they typically move together. So if both the stocks go up, yes, I'm making money off the stock going up, but I'm also losing money because remember, I bought some of the opposite end of the position. I sold some of it, or I did a put, which a put is a essentially an option where you're anticipating price going down. You got to pay for it. So okay, well now that's how they kind of do one of they have different strategies where they don't really hedge like that, but there is a way to hedge in case of worst case scenario, because say if the market goes parabolic, there's a major market dump. Okay, yeah, you bought both of those positions are correlated, but you won't lose nearly as much money because you hedged it, because you bought the bottom side of another position or a correlated position. Well, VIX, when it goes up, that impacts the option prices. So say I don't actually want the option prices to increase. Well, if I were to use one of these VIX options to hedge, it says it right, literally says it right here, hedge portfolio, volatility risk. To hedge that, that's how the large funds, because they remember these people are working with millions, hundreds of millions, billions of dollars. So they're, of course, 1-2% of that is a couple million. You see what I'm saying? So they're moving percentages of their overall portfolios. They like to hedge it. They like to keep their portfolio ticking up, making profits. That's how they work. That's how they function. They can do certain financial plays, especially with options, where you can actually leverage a lot of stuff with options. Of course, you can also move the options market, which is, that's where I said they like to play games in the market. Like I can buy an option, and then say I put a 50 million into a stock or something. I buy an option that the stock's gonna go up. If I dump 50 million into the stock, of course that stock is gonna fucking go up, and I can make more on the option than I make off the damn option position itself. So that's why I'm like, they can play with the market and do things like that. Some of them might earn fines and stuff doing that, but still, the fines don't come anywhere close to what they actually profit. I looked at some of the reports on some of the fines they do on the foreign exchange markets, and they get like a $300 million fine or something like that, but they made fucking $2 billion off the damn off the trade. You know what I'm saying? So it's like that's why they do what they do. Especially if you look at the damn foreign exchange market, that shit is all over the fucking place. They're just taking out people's orders left and right. But follow this example. Hey, we can actually make money off of a digital product. Remember, this does not exist anywhere in the world. It is a ticker. It is nothing but a digital product. We can make money off a digital product. 2006, they've already proved that it works. Next digital product, Bitcoin. But they have to accumulate enough of it. I'm not sure if they already accumulate enough. They already have a decent amount of exposure to the markets, the finances. Eventually, they're going to pick their winners. Bitcoin is going to be the one financial product that it seems like they like. There might be some tertiaries like maybe XRP, maybe Ethereum or some of those, because they like the narratives on them or whatever. It gives options. It gives variety. You know what I'm saying? They're all digital products. They are all digital products. Just like the VIX, you can do Bitcoin futures already. Bitcoin options on certain platforms. I'm pretty sure, like there's some crypto platforms where you can do like futures and options, decentralized that is. Kind of a little weird. Some of them might be a little scammy, so I don't really not bother with them yet. But crypto is a financial product. Now, I cannot say to buy currently. If you do, don't put more than say you got 10,000, you want to put it in crypto. I wouldn't put more than 1,000, 2,000 in right now, because like I said, I'm waiting on this to go down. But you put 1,000, 2,000 in of your 10,000, that's no more than 20%. And the market let's just say Bitcoin does go up to parabolic. Say it does go up to 500,000. Yeah, you didn't have everything you could have put into it, but you got exposure to it. You got a better return off of it than you could have in the short run with any other stock. Picking stock, because that's it's hard to do. So at least you get a return off of it. But I'd wait until this next dip, and then pump, and then sell, and then what happens after that, I don't know. If these folks have bought enough of it after this next cycle, if it does dump big, like I assume it can, they're gonna try and wash out a lot of folks. You're probably gonna hear a lot of talk about Bitcoin going to zero. Bitcoin will probably dip below 17,000. And there's probably going to be a lot of talk about Bitcoin going to zero. It's probably going to go down to 5,000. And then you're going to see that motherfucker march right back up. And if that happens, hold your horses because it's going to go back up and it's going to go back up kind of like what it did here. And we are going to see Bitcoin below 60,000 ever again. And by that time, the institutions, Charles Schwab will probably start offering Bitcoin to trade. All the other institutions and brokers, they're going to have enough Bitcoin accumulated, enough liquidity into Bitcoin where they can actually start offering it as a financial product on all their platforms. And then they're just going to make money off that shit. They might have their own little tertiary side chains, similar to like Coinbase has a base side chain, because it's easy to make one of those side chains. But each of them might make their own little side chain where people can literally trade on their platform, like Thinkorswim or something like that, like Robinhood or something like that, but it's connected to each of the networks independently, decentralized technically, because it's a side chain, remember? Like Robinhood might make Hood chain. It's their own side chain, but you could trade it on their platform. You can use their Hood token or whatever. You see what I'm saying? So you can use their little token for cheaper exchange rates and stuff like that. They make money off the token sales. They make money off you trading. It's a financial product. You can trade anywhere in the world. Anybody can make an account using their network. Anyone can swap and do stuff on the little decentralized exchange that's on their network. Like, I'm seeing it as a financial product. I'm seeing it how they can generate income, because our population, if things go like with the what's that experiment? I'm a damn brain fart now. Calhoun experiment, which is very eerily similar to the Calhoun experiment actually, where you had the population spike, and then from that spike the population declines and then eventually goes extinct. So if something happens like that, because we're currently at the peak and we're currently trending downwards, if something like that happens, they have to be able to generate money, which is why we're seeing the immigration thing where they are going to start letting people back in because we have to keep the populations up. That's what fuels the economies. So America's in a position where people tend to want to flood to America. So what better way to do that than America be the hub for the next great financial product? Because technically, remember, folks, London is technically the financial center of the world, folks. Remember the original colonizer? London, not New York, not America, London, the UK. They are the financial center of the world. We are going to see with this crypto thing, when financial products like that, um, we are going to see America, because I think we're still doing the relationship over there in London. So that's why I'm like, okay, America might actually beat them is potentially going to beat them to the punch. Don't really care about the third world countries and stuff like that, because none of them are in line to become that. Even China, I think they shot themselves in the foot by banning the whole Bitcoin thing, networks and stuff. I think all their folks had to move out of there because they like literally fucking banned it. And I'm like, oh wow, this really does. Now this really, like, after I saw that, I was like, oh yeah, now I'm really bullish on crypto, because now like this goes even further into the narrative. Now you have the so-called China, which is supposed to be the next, you know, they were supposed to overtake America when it comes to the economics or as the superpower. But now I'm just like, okay, I'm seeing this whole crypto project where America becomes the financial center of the world because of it. Because these other countries like China banned it, which eventually, once they see what's going on, they might eventually allow it back in. But by that time, our institutions would have already accumulated it. We already have people all over the country with uh, Bitcoin farming and stuff like that. Because you make a nodes, so all these nodes all over the country. Cardano has nodes all over the globe. Bitcoin has nodes all over the globe. China did like their whole thing where they banned it, so they had to either go underground or move some years ago. So I'm seeing this narrative play out. I'm just putting it out there because I want to make it known. This could be what keeps America in its position, not only in its position, but also overtaking London as the financial capital of the world. We're already reserve. We are already the reserve country, but technically, the banking center of the world is London. I'm seeing this crypto thing could potentially flip that. It really could. And this is what's going to be the next great financial product that will make America the banking capital of the world. Crypto is a financial product. Remember that. Take that. If there's anything you get from this video, just remember that. Crypto is a financial product, just like the VIX. Just like the VIX. It is a financial product. They've already proven you can make a financial product successful. It is literally not based off of any real world asset outside of just the volatility. You're literally just trading the volatility of the market. It is a financial digital product. Proven. It's already there. Financial digital product. Some people would even say it's a speculation. It's a financial. It's a speculation metric. So just like people use the VIX for volatility, people have been using crypto for speculation. So I just hope enough folks kind of catch on to what's going on, but I'm seeing that play out. I'm seeing where people are going to be left out of the potential gains from this, because these institutions are only going to get richer from it. And the folks that don't participate, the folks that don't have any kind of exposure, you're not going to have anywhere near the gains. You're not going to be anywhere near able to compete. And it's just inflation is crazy, but eventually some of the money, I mean, the money will make its way back into the market. Eventually, the money that they make from this, because they're going to pay taxes on whatever income it does generate and all that shit. There's going to be regulations on it. The people that trade it and make money are going to pay taxes on it. The people that supply are going to pay taxes. The brokers and stuff, the exchanges and stuff, because they're going to make money off the financial product, and they're going to pay taxes and stuff like that. And it's going to be regulated as it is. They're going to probably leave it. They don't want to make it too strict, because if they did, which is why they backed off of Bitcoin and all these crypto, they backed off of banning it, by the way. But if too many countries start banning it, now they want China to ban it, because remember, we're trying to overtake China. So yes, that's perfect. That's great. So they want stuff like that, but they don't want like London and Europe and all these other countries to ban it, because then who are they going to sell their product to? You see? So people are going to trade it. Some people are going to make a lot of money. Some people are going to lose a lot of money because they sell. Remember what I said, if anybody that bought Bitcoin before 2022 is in profit. They literally triple, quadruple the money. All you had to do was just buy it and hold it. I don't care if you saw it go up to 60,000 and drop back down to 20,000. If you would just hold it, you literally would have quadrupled or doubled your money at least by now. You literally could have bought it at the last top, and you damn near doubled your money just now. So anybody that bought Bitcoin before 2022 has damn near doubled their portfolios. So just put that in reference, but just put that in perspective. There's going to be a big shift. There's going to be a big change. I'm already seeing it with the price action that's going on in Bitcoin. I don't really like it, because now it's unpredictable now. I've never been the one to kind of predict it, but the cycle has been pretty normalized. But now this current cycle, it's just different. It's very price action is very much different. It looks like a foreign exchange, and their regulations and stuff. It's going to continue. I think they just released some sort of Bitcoin something where it's like mutual funds and now 401ks. You remember what I said about the mutual funds? They're supposed to technically not want to get into risky assets, but technically, if you want to get a large chunk, remember this crypto stuff is projected to go up. So if you do want to get the best gains on your retirement accounts, yes, like I can't say you can't. It's crypto currently is the newest market where you can get the best returns. You just got to buy it at a decent time, which technically just similar to people buying it back in 2022, all being in profit currently. Something similar is going to happen in the next 3 to 4 years. Anybody who bought Bitcoin before 2025 will be in profit because Bitcoin might be up to 200,000. You know what I'm saying? So the fact that I can't put a little bit of my retirement account into it, remember, I just want to put 5-10% in there. The fact that I can't do that yet sucks because I'm gonna get taxed on it. Like any gains I get out of it now, I'm gonna get taxed on it. And that's out the wazoo. And that sucks. Yes, I paid taxes last year on it. That sucks. I would rather like to invest it in a tax-free retirement vehicle because I can keep all the gains. And then I'll be able to withstand the inflation and if I want to retire, which I don't really plan on retiring technically, but if I want to retire technically, I could. Although I plan on using my for investments and building purposes, but I could. So just if you could put 2 to 5% in there, wait for a significant dip, and then put a little bit more in there, trickle in, dollar cost average. Do the exact same thing that Warren Buffett and those folks tell you to do with indexes. Dollar cost average, by little by little. That's what I could say. Never put more than a significant portion of your portfolio into it. The more you put into it, the more risk. So anybody will tell you, like, you don't want to risk more than 5 to 10% of your entire portfolio. If you want to go on the risky side, some folks, they'll go into it. They'll put it all in there. Some folks put 50% in there. Some folks will put 40% in there. And when they get those decent returns buying these projects, then it is what it is. So I just wanted to put this out there. I just want to put because I've been talking about this for like the last year or so. I just haven't made a video about it. But I haven't really heard that. Somebody might have said that, but I haven't really heard like it put in perspective. Bitcoin's a financial product. That's what it is. It's a financial product, just like the VIX, just like some of these derivatives that they have. And you just look up what the definition of derivative is. It is essentially just a digital product. So they've already proved that it is possible to make money off of a digital product that literally is based off of no real world asset. It's already proven. It's glaringly obvious if you just look into it. So I'm going to end the stream. This has been long. This is a long ass rant. I actually got some new stuff I got to look into now. Some of that stuff I was like, oh, let me look at that. Just like the dips, these major dips getting faster and faster on the S&P 500. There's a lot of research I got to do now. A lot more research just about looking at some stuff right here in real time. So keep that in perspective. Crypto is a financial product. We will see what will happen. This has been a late night thing. If you could, please smash the like button. And if there's anything, all this stuff, fair use, just fair use. So I don't know if I doubt there was anything on there, but you might have seen some articles. I don't want to get flagged for that, but fair use. And, fair use. I'm doing a reaction to some of the news. And y'all have a good night. Till next time.